Hi everybody. Okay, so for the weekly essay this week, we've spoken about Telstra. So I'm going to click on Viewers, and I'm going to go to Stock Viewer. Right, so Stock Viewer, either click there or here, whichever one you prefer. I'll go to this one here, Stock Viewer, and what I'll now do is I'll type in TLS.AX and press enter on my keyboard. Don't forget the .AX. This brings up Telstra. And if I scroll over here, so we're going to look at the dividends in this example today here. There we are, dividend yield 5.71. You can see here, as noted in the essay, earnings yield versus dividend yield. So effectively, Telstra's paying out what it makes. Here's a little trick. Left click on your mouse key, hold your left key down while clicking on EY per the grey box there, and then just drag it across, and then let go. So you can put your earnings yield right next to your dividend yield. I like to do that because it gives me an idea who is paying a good dividend and have they got enough earnings to meet that dividend. So yes, I can see Telstra a whopping 5.71 with an earnings yield of 5.71. So they effectively are paying out what they're making currently. So this ties back effectively, you know, what was being noted there in the Australian Financial Review, the Fin Review. It's a quote from the Fin Review there. Strictly speaking, Telstra's dividend payout ratio is 70% to 90% of underlying earnings. But in declaring its dividend for 2020, the Telstra board approved a 99% payout ratio on underlying earnings. And there it is, effectively. So 5.71, if you take that probably to a few decimal places, but pretty much 99%, call 100%. 99% is just about 100%, isn't it? So there you are. And there it is in VectorVest, showing you there 5.71 earnings yield, dividend yield 5.71. What's interesting here is you can see that dividend growth is forecast to be negative 13%. It shouldn't come as any surprise because Telstra's been under a fair bit of pressure on its dividends for quite some time. Now I'm just going to right click here and just auto fit all columns, just make it a bit neater there. All right, so what I'm going to do here is on the drop down here, graph selected, and on the graph layout here, I'll select VectorVest layout, turn on the earnings, and I'll turn off all the other ones here, apart from the price. Right click, make this an area graph. Down the bottom here, I'll just clean this up just a wee bit here, just to tidy that up a bit. All right, then I'm going to pull this back just a wee bit over here. So let's pull it back just on, say, 6 years, for example. Okay, so here we are. We've set this all up. What do you think falling earnings are going to do to dividends? So add parameter, dividend analysis, put in the dividends in dollars and cents. Here it is, and change the style. Let's make this a different color so it stands out and make the line a little bit easier to see. There we are. Okay, so there we go. Yeah, you got it, right? So falling earnings, falling dividends, and therein lies a lesson. Why buy into companies that have falling earnings? Because not only will that impact the share price, it will also impact upon the dividends, all right? So falling earnings, falling share price, falling earnings, falling dividends. All right, let's close out of there. Now you'll see here, so we had a look at the earnings yield versus the dividend yield, and as you note, Telstra typically pays out between 70 to 90%. So you can go back in time historically, and you can check that out. So if I go back to, let's say, 2014, for argument's sake, just any day arbitrarily there, just to show you this, and I'll go back a little bit in time. Here we are. The earnings yield versus the dividend yield, 6.29 versus a dividend yield of 5.52. So what's that? 5.52 on 6.29. It's about an 88% of earnings effectively paid out via the dividends, right? So you can see that ties back into the Financial Review quote that I provided you with there in the weekly essay. And you can go back again and again over the different year time frames here, and you can continue to check that out. So let's do one more for a bit of fun here. Another June, let's say the 22nd. This time around in 2017. And if I go back a little bit over here, here we go. Earnings yield 7.64, dividend yield 7.18. So You can see that Telstra typically pays out most of what it earns. Okay, I'm going to right click here and just auto fit all columns, make it nice and neat. And you'll see over here, look, it's been fully franked, right? So I think that's always been the case. It has been fully franked, right? So you can find out, of course. How do you find out? Let's do this again. Let's put in Telstra, tls.ax. And I'll show you just over here. I was having a look at the earnings yield and the dividends yield, as well as dividend safety. So I've put this on a graph, and you can see, you can look at the relative percentages there. Earnings yield 6.10, dividend yield 4.65, for example. So you can see how it's pretty much been neck and neck over the years. Now, if I put on earnings, so here's our earnings profile again, and let's put on the share price just to set the context here. And I'll take off dividend yield and earnings yield. But if you have those falling earnings, I'll pull it back a couple of years again. If you have those falling earnings, what do you think it's going to do in terms of dividend safety? Let's clean all this up for now too, just to make it nice and easy to look at. All right, turn for date line as well. What do you think it's going to do to dividend safety? Well, there you go. So you can see that dividend safety has been, on average, quite a bit below 50 for quite some time. So if I do this, I'll put in a horizontal line. Let's line it up there at 50. All right, so you can see, apart from a little bit of a blip over here, dividend safety has been well below 50 for quite some time. All right, so when you've got falling earnings, it impacts on your dividend safety. And let's do this. Let's add in parameter, our parameter, dividend analysis, dividend growth, and let's put that on and turn off the others for now. And look at that. So dividend growth, let's make this an area graph here, change graph area. Here we go. Look at that. Negative dividend growth kicking in. So VectorVest has been alerting you. Be careful. The outlook is not good for Telstra to grow its dividends. So if I put the dividends back on, look at that. Spot on VectorVest, right? So there we go. Negative dividend growth. What's happened to the dividends since? Right, so I'll just change that style again, make it jump out there with a different color, just so you can see there, just to make it nice and clear. There we go. So dividend growth goes negative, dividends come off. How powerful is that? All right, well, I can't leave you just looking at Telstra because, you know, all right, sure, we've pointed out what to look for in terms of being careful. Let's end on a positive note. Show me a company that's growing its dividends where all these factors are stacking up in its favor. FMG. Might want to have a closer look at this one. Here we go. Dividend growth. Look at this. This could be a serious contender for you to consider. Now, again, please, this is not to be seen as financial advice. Please do speak to your financial professional. But look at this. Dividend growth. 25%. It's a positive number. Look at the dividends. Dividends going up. What's happening? Yep, you got it. The earnings are growing, as we've seen over the weeks and months as we've written about the stock. Great set of earnings currently. Those earnings are rising earnings, rising share price, rising dividends, rising dividend growth, and solid dividend safety. Look at that, a solid 63. That's an excellent score in Australia on a scale of 0 to 99. 63 out of 99, excellent score. So next time you're looking to acquire some dividend stocks, check out your all-important earnings. Make sure your earnings are going to sustain those dividends. Make sure that the company has got enough earnings yield to meet those dividends. So if we go into viewers here, and let's come into here and put in FMG.AX, enter. All right, and we'll come back over here. So dividend yield, look at a whopping 10.4%. If that's not good enough, it's also fully franked. Wow. Dividend safety, 63. Dividend growth, 25. And yes, the earnings yield is enough to cover the dividend yield currently. All right, until next week, hope you got a lot out of this. Bye for now.